What about the start to Q2 earnings season here? Delta yesterday, Delta, who always sets a really high bar for itself, last quarter comes under that high bar. It doesn't have a that good of a day. You're looking kind of a mixed here in the bank earnings. Wells Fargo trading down substantially, Citigroup up substantially. Fastenal, the nuts and bolts of the economy, that's trading up. Kind of a mixed start here to Q2 earnings season.
Yeah, and I think that's what we're going to get, and that's what we should get, right? The uncertainty of what's in front of us is a reality. When we talk about what the Fed is going to do, that uncertainty has been there, and it's going to continue to be there until we get some more clarity from them. The geopolitical risks that are out there are going to continue. Our own election cycle impact is going to be there, and that's going to continue. So I think we are going to get somewhat of a mixed bag, and appropriately so. I don't think we're going to get a real gung ho speeches from CEOs and CFOs that everything is rosy and the outlook is rosy, because we're all kind of fighting in this same trench of what's in front of us. You had Jamie Dimon talking. You made a comment today that M&A activity should really pick up as we get towards continue throughout this year here. But from the regulatory element side of it, that's going to be somewhat of a headwind that gets in front of that there. So we're going to hear this hedging comments coming out of these earning calls, and I think it's right. It's rightfully so. No one can really pinpoint what the Fed is going to do and when they're going to do it. Yes, economic data is kind of showing us where this might go, but you never know what the Fed's going to do. We continue to watch what's coming out of Washington, and that, not that the election has a overall impact on individual companies. I just think from a economic point of view, the outcome of this election is going to be very interesting in the position that we're in right now, where you have an incumbent president who is struggling in the polls, and the other ancillary issues that are coming along with that. I think that's just going to force a lot of lack of participation into our markets here. So for second quarter earnings, they should be decent. They should be tepid, but I don't think we're going to get real, positive outlook, forward-looking comments coming out of the C-suite offices. And again, rightfully so. The headwinds that are in front of us are real, and they're going to have to navigate these very, very gingerly.
So, what sectors would you be looking towards here? It seems like we're kind of in a stalemate here with the with on the rate situation. Something I've talked about, like why do rates necessarily? I mean, well, they pretty much established that they're not going up. Why not? Why do they substantially have to, go down? Where do you go if it just rates are muddled in this area 6 months from now? New, change, perhaps a change in administration, interest rates are still where they're at.
Right.
What, where do you go?
Yeah, so I think in this interest rate environment that we are in, we're not going to see the pendulum swing back as fast as everybody wants, right? If you look at how long it took us to get to this point, it's not going to swing back. So we are going to remain in this interest rate debate and move for quite some time. It's going to take us a long time to get back to somewhere where I think people feel comfortable. So that being said, I think financials have been relatively been doing well throughout this timing, and I think as we continue that this is going to take a longer period of time than people would like. I think financials certainly remain in play. When you look at the tech sector, it's hit or miss, right? I mean, you're either going to be really right or really wrong. And when the swing is when it's swinging up, you want to be on that board. You're not going to be able to pick the timing right of when that rotation occurs, as we noticed yesterday. But I think overall, again, that two steps forward, one step back. If you're in that tech sector, I think overall you're going to do well. I do think people are becoming a little bit more comfortable with real estate interest rates, mortgage rates of where they're at. We've seen some activity continue to pick up in that sector there. Again, as it's going to take quite some time for interest rates to come down, people do need to buy houses. People will want to sell houses. That transactions are going to continue to occur. You find that in this, 6 to 7% range at this point, where people do feel comfortable, even if rates come down, we're not going to see an initial pickup in that area. But I think as we get a couple of cuts, we'll start to see that area certainly start to pick up. Home builders have had a lot of struggles within themselves. People are watching what they're doing on home improvements, and home builders are being very careful about what they're
Uh-huh.
doing moving forward. So we're gonna have to continue to watch that. And the last sector I just think we need to keep an eye on is the travel and leisure. I think people are um, really watching where they're spending money, where their discretionary spending is coming. Are they overspending? Are they splurging on those vacations? They're thinking twice about that. Yes, we've seen airline tickets come in, pricing come in due to fluctuations in oil prices. But I think travel and leisure is one that we're going to have to keep an eye on as discretionary spending continues to be tight.